Hey guys, what's happening? So before you watch the highlights of the most recent Technical Tuesday, I have some amazing news for everybody who's in love with Technical Tuesday as much as me and Shaun are. We've been deciding to do Technical Tuesdays every single week. I know previously you used to watch them every single few months, but we have a new platform in which every single week we'll be doing a Technical Tuesday 60 minutes plus. And we came deciding how much we can maybe charge for it. We see a lot of people are charging $1,000 a month, $500 a month. We decided to go £50 for your Technical Tuesdays. There's a link below, join it and we will see you every single week from now on, and you get to view all the other episodes that we'll shoot from now on. Thanks. Technical Tuesday, this is episode 58. We had a lot of people join last minute. So thanks for everyone for being here. This is a new kind of platform that me and Shaun are still learning.
Super feedback from last week, especially on the Twitter and through the Astro Telegram. I mean, we always post late, and at some periods of time when we run over some of the market analogies and technicals, it no longer really stands because we post late. So we've had some great feedback so far as how we can make this more as a routine, so to speak. So me and Natt put our heads together, and some of the information that we do give out, especially last week as well, some of the gems that Natt dropped, some of the gems that I dropped, we want to get really, really serious with the knowledge that we give, and we feel like some of the information we give is not for YouTube primarily.
So guys, when it comes to fundamentals, one of the things I'm here to try and do is make sure that all the information is relevant and you can actually apply it to your trading. There is always thousands of narratives when it comes to fundamentals in the markets. And what I try and do for you guys and for everyone who I'm ever trying to help with fundamentals is talk about what's market moving, what can you make money off. So always remember that. So last week there was Evergrande. That story is just getting a lot worse. And I'm sure if you guys flick onto anything when it comes to fundamental or macro or news related, you're going to see the Evergrande story. So I'm going to give you guys a bit of an update on that. I've got my screens behind me open to show you what's going on. Secondly is the Fed talks last week. I want to talk about how that's actually helped have a very, very bullish dollar. And it's bullish against all G10 pairs and against emerging markets. So you can actually apply why that dollar is so powerful against these pairs, because there's about 7 different reasons why that dollar strength is there. I'll be then going through a little bit about pound. There's been a lot of pound weakness across pound dollar and pound yen especially. There's a bit of a double whammy there for everyone to look at. And then I'll also finish up with, I think the main narrative will be Fed, Evergrande, and a little bit about pound weakness, because I don't know about you, but I'm running out of fuel in the UK, and that is affecting pound quite a lot. So I'll start off behind me. Let me just make myself a little bit smaller. There you go. So the Fed. So as you guys can see, dollar index is actually at, I believe it's 10-month highs. So past there, can go all the way back, and we're pushing at, let me just go back in time to the daily. So we're pushing 10-month highs and we're approaching 94. So as you guys can see, last time it was this high was back in November last year. So that's why I said around 10 months. Now, dollar strength has come for a few reasons. So number one, and this is again just some random points for you to take away, there has been a sell-off in stocks. So as you guys can see here, I've got US 30 open, massive sell-off there. Now, one of the reasons for this sell-off was there was speculation around 2 of the people from the Fed actually being accused for unethical trading and also slight insider trading. One of the individuals actually made 18 million off selling his personal portfolio and shares. So that is obviously create a bit of a double effect on stocks, which again, stocks lower, which has helped push US dollar higher. Now that insider trading story is actually probably going to become a little bit more popular over the next few days, but that's one of the reasons why the dollar strength is there. The second one is the tapering story. So again, tapering, for anybody that doesn't know, is a way that economies will use to cool down the economy. Australia, Canada, New Zealand, and we're waiting for the US to actually finally introduce tapering. Now, what they did last week, so in the last Federal Reserve conversation, which was after last week's Technical Tuesday, is they mentioned that the tapering will possibly start in November, and then the first rate hike could be next year, middle of next year to be precise. So again, that has pushed up the US dollar. And as you guys can see across various pairs, the US dollar has been, I'll go back to pound in a minute, but even if you look at some of the emerging markets, we've had quite a bit of a bullish US dollar. Another reason is we're actually waiting for a non-farm payroll for October's to come out, which of course will be September's. Now, this non-farm payroll is going to be one of the most important because it's the first one where stimulus in the US will be slightly removed from the figures. And also people have gone back to school, kids have gone back to school. The US as an overall economy is looking like where it should be. With all the data being the way it is, I believe it's 80% of people, metal dollar index, 80% of people that had lost their jobs over the pandemic have now got them back. And I believe the unemployment rate is around about 5.2%, where they want it around 3.5%. So just to reiterate, you've got the insider trading story, which has pushed stocks down, dollar up. You've got dollar index here spiking at 10-month highs, which of course is helping the overall bias of the dollar. You've got the overall tapering, which is going to be the talks in November. So keep your eye on that story. And then, yeah, just the overall sentiment across all G10 pairs and emerging markets is we have a strong dollar.
Right. Since the last Technical Tuesdays, let's start with gold. Let's get into some technicals now. Let's get into some pretty neat chart work, so to speak. Right. So last week, we were looking at gold coming down into 1735, which we achieved today. And when we were trading last week, we were around the 1776, 1780 zone. Now, for you guys who have been on the private Twitter and some of Marco's work as well, we put out there that gold is ready to dump short. So let me go ahead and just take off some of these texts right now. And hopefully, I'll just start again, actually. Let's just start completely from scratch. So let's go into, right. So last week, let's go back to the last Technical Tuesdays. We highlighted the high of the previous week, okay? And we highlighted the low of the previous week as well. Now, highlighting the low of the previous week, around 1744, 1745, we have a band, so to speak, on the weekly. I would like to just put it out there for you guys who are new. The weekly chart is kind of hard to dissect, especially when you're looking at some of the retail instruments and some of the standard candlestick formations, etc. But a nice tip for you guys is to always go back to the previous 2 weeks. So if I went back to the last week high on the weekly and the last week low, okay, what we're looking at here is we're looking at the highs and lows of the previous week, where the market cycles, obviously they're always changing, but we can do some decent intra-week swings from this method. So allow all of the noise. We don't want to go into too much of the price history. I like to focus, especially on gold, and this works relatively well, into the previous weekly high, previous weekly low, and the week before as well. As the price tracks along, yes, we are going to have to do this week's high and this week's low. But where I got the trade idea from is that, number one, on the monthly, looking absolutely terrible as we come into the last quarter of the year now. And some of the points on that expressed there as well, with the safe havens being the US dollar and the yen, I feel that dollar flew through the roof, and we've seen that on pound today. I'll get to the pound pairs in a moment, technically, but that was majorly in favor for the down move that we predicted on the last video. Now, with that being said, I'll put the weekly zones on, the weekly bands. So we got the high of the previous week and low of the previous week. And then when we come into the daily time frame, we can see simple weakness. So what I would like to do is just keep it clean weekly, come into the daily. So we're studying the macro concepts right now, but we're looking at some of the round numbers. So number one, we got the 1755 where you can see 1, 2, and 3. We had a spike through, and we couldn't even really make 1755 today. Okay, we came shy of that, and we were about to roll over. Now, with these weekly areas, what we often find is gold, number one, is on a clear, nice downtrend right now. But what we often see is if a cycle has not been completed from the previous week, it might take Monday, Tuesday to actually spike through one of the weekly areas, leave the weekly spike, the weekly wick, and then roll over into the desired destination, if you will, the price projection, the price target. Now, coming into the 4 hourly, we can see that we can actually track some good price with the highs, the lows of the session zones, which I recommend to everybody here. Again, we're going to get deeper into this as we go ahead with all of the other Technical Tuesday volumes and using the price numbers, round numbers, 1760, 1750, 1755, etc. So 4 hourly, all I like to really do is just jump in and find areas of value from the candle bodies. We have one there, we have one coming across right there as well, and try to keep it as clean as possible. Coming into the 30-minute, I feel this is where it gets very, very interesting. So last week, what we had is, I like to use the highlighter tool, by the way. So come in here, so we've got 1600 hours, more or less, in deep with the US session. Then we had the spike through into the weekly high, creating the weekly high. But what we also had there as well is this solid area of the session that we could have brought across. Now, gold, it's kind of like a rattlesnake. Even though that the dollar index is bullish overall, sometimes it will not reflect on gold and some of the other USD pairs as well. So what we actually seen was the week start. We come in, we thrusted high to make that weekly high, and then the market was pulled directly back down. Now, with that being said, what I like to do is I have a very good routine over here in Thailand where I can wake up 12 midday, 1, and I'm just catching the Asian session. So I like to focus on the session switchovers. Asian session switchover, i.e., 1 a.m., 2 a.m. London time, come into London.